Good morning, everyone. This is PhillipCapital India, and I'm going to share the weekly technical commodities outlook for the period 12th of August to 16th of August 2024. Last week, gold witnessed volatility from the lows of 69,000 to the highs of almost 71,000 plus. It finally settled at around 69,895, marginally in red, down 0.5%. So it formed a doji kind of candlestick pattern on a weekly time frame last week, indicating undecisiveness. As per the price study, pullback towards 72,000 mark is going to face fresh supply, while on the lower end, 68,000 lower, 67,500, this support zone can be looked for fresh buying interest. So overall, we are expecting a consolidation in gold as per the price study. And for the coming week, the bias will be buy on dip towards 68,500 and lower levels with the strict stop losses, while any pullback towards 72,000 and thereafter the interim hurdle of around 73,300 can be looked for contra trading short bets, keeping strict stop loss of not more than 200 odd points. If you talk about silver, it ended down more than 2.5% last week at 80,543. The broad zone of consolidation was around 78,500 to 83,500 plus levels. For the coming week, once again, the bias will be buy on dip and sell on rise. Initially, any kind of dip towards 78,500 and lower levels can be looked for buying, while on the higher end, pull back towards 84,000, 85,000 zone can provide a better risk reward ratio for going short. So overall, we are expecting gold and silver to consolidate for the coming week. Crude oil has witnessed a decent bounce back. It was up 4.5% last week from the lows of 6020 to the almost the highs of 6450 mark. So we can see here on the charts clearly that it has taken a support at around 6,000 mark and witnessed a pullback. But overall, if we see, then the structure is still not that bullish. It's a range to downside bias till the time crude oil is trading below 7,000 and 7250 odd levels on a midterm time frame. So as per the price study, the bias will be buy on dip and sell on rise for the coming week. 6,600 and 6,960, these are the resistance levels where one can look for contra trading short bets. Dips towards 6,100 and 5,810 level can be looked for trading long bets, keeping strict stop loss as per the risk appetite, or a long ratio spread can be looked around these levels. Overall, on a positional time frame, we are expecting that trading below 7,072.50, the bias remains sell on rise. And on the lower end, 58.10, 54.50 cannot be ruled on in weeks to come. If we talk about copper, it made fresh lows last week. It slipped down and ended well in red at 776 levels. We can see clearly on the charts that the bias is range to down. It's a retracement of its previous strong up move, and the major strong support for copper comes at around 740 odd levels. It's a cluster support zone. So we are expecting that any kind of dip toward those levels can provide a good risk reward ratio for going long. But at the same time, any pullback towards 820, 840 zone will be looked for contra trading shorts. So overall, the broad trading range for copper for next few weeks can be 740 and 840 with buy on dip and sell on rise. So for the coming week, as mentioned, 745, 740 dip toward these levels can be looked for buying, and pull back towards 815, 820 can be looked for contra trading short bets. That's all from my end. Thank you. If you find our content relevant and if you want to receive our regular trading ideas, options, strategies, you can contact us on the given mail ID and the contact detail for our research, trading ideas and reports. Thank you.